Good morning, everyone, and welcome to a new week. It's August 4th, Monday. I'm Dan Basse, joined with Ben Buckner. We're here to discuss grain markets, which I don't know about you, Ben, but it seems to me to be a lot of choppiness now that trade negotiations to a large degree are done. We don't know how big is big in terms of the U.S. corn and soybean crop, though maybe crop ratings will help us out in the weeks ahead. But ahead of a USDA report on the Tuesday, the 12th of August, no one seems like they want to do a lot ahead of private estimates that a lot of them will be out this week. Yeah, you got any other ideas? Because I'm lacking inspiration in the new week.
No, I think that's right. For anyone watching that's wondering and thinking there's really not much going on, I think that is the correct answer. We thought last week was pretty dull. And while we're only a couple of hours into this week, I think it probably will be more of the same. But we do have some kind of ideas and things to think about, I guess. Again, we're all focused on long-term risk management. So we kind of yesterday afternoon saw, I think what is going to be maybe some prolonged dryness in the U.S. if it does maybe get warmer. Hurricane season is imminent, so we thought we might add some premium, and we're doing that now, but it hasn't been very robust. And so the question to us is why that is the case, and it's still just more of the same. So I'm going to run through what's happened weather-wise in the last 72 hours or so. On the left, you've got gauge measured weekend rainfall in the United States, and so it was very, very dry, very pleasant across the principal Midwest. They did have rainfall. It's called 0.2 of an inch to upwards of an inch plus across the central and southern plains. So those places are still adding to moisture reserves, not subtracting from them. And of course, we all were outside over the weekend. Let's call average temperatures almost everywhere high temperatures, 76 to 77 degrees. This is very nice. And we've got another couple of days of this. So the 8 or 10% of the U.S. corn crop that will have pollinated since it got cool, I think those crops will do pretty well. There's not a lot of threats there. And then thinking about why the market may not be terribly excited, even if this 10 days of dryness does materialize. And I think it's just moisture reserves. And also thinking about, last year's yields, while they were substantially below expectations come January, they were still pretty sizable, especially in corn. And to me, this is the story. So you've got soil moisture at the end of August last year on the left, and you started to see this pattern of reduction. September map, a lot more yellow and orange. And then you've got what NOAA thinks soil moisture in the U.S. will be on August 17th if the forecast verifies. And so maybe it's just as simple as Kansas, adequate to surplus. A lot of water in Iowa and Nebraska, and even Ohio doing a lot better than they were last year. So I think a lot of the corn, soybeans, even spring wheat will be able to withstand bouts of dryness in August. And so I don't think it's pertinent to change anyone's very high yield idea. So it is water availability for the most part. I think we will be better this year at the end of the month than last year in almost any scenario. So that is still one of the features. But also we want to think long term. Will there be changes to global supply and demand? Will there be some kind of imbalance in the next 12 months? It's something we're kind of moving our heads to. And since it is August, we are going to start paying a little more attention to Southern Hemisphere weather, especially as it pertains to wheat yield potential first. And it has been relative to normal, quite wet in Australia and Argentina. So these graphics show you in both countries, July 1st to August 13th, % of normal rainfall. Primary wheat production areas are highlighted. So if we assume the 10-day forecast is correct, those 10-day forecasts do have more water in Western Australia and in Queensland in the Northeast, mostly surplus. So it has rained a lot more than normal in both Australia and Argentina. And so that does begin to more directly impact wheat yields starting about September 1st onward. It doesn't seem like we're going to have a problem there. So what is the next area or timing of supply dislocation? And maybe it's not until we get into the heart of the South American row crop growing season in December before we can even entertain something like that. So I think that's kind of shown you why markets have been pretty dull the last couple of weeks. We also have, I think, OPEC raising crude production estimates moving forward. And already, I think we're concerned with, trade barriers, of course. We never really saw much of a seasonal bounce midsummer in the crude markets. And so those trends start to turn, more negative about late summer, early autumn onward. And seasonally, we do start to build U.S. crude inventories, year in, year out after about September, summer driving season ends. We start to kind of loosen up the U.S. energy balance sheet. So that runway is getting smaller for, I think, the energy markets to have a real impact on something like corn, maybe even soybean oil and soybeans. Cash ethanol market kind of showing us following crude more or less the last 30 days, and the ethanol market probably did peak at about $1.80 out in the Midwest in the month of July. Seasonal trends because of energy consumption do move lower. So you're probably going to slide the swap Midwest ethanol market into something like $1.65 or $1.70 per gallon. And if you look back the last 2 or 3 years, the cash ethanol market really has done nothing the last 12 or 14 months. So it's just kind of dull. It's not giving us a lot of excitement there. So you got weather, biofuels, at least as of now, not giving us much to sink our teeth into. So I think what we're thinking about longer term is to explain why the markets have done what they've done the last 2 months. That's pretty easy. Mother Nature very cooperative. That follows pretty large South American production and a favorable growing season there. Southern Hemisphere looks good for now. We want to communicate the ideas that do we need to be prepared for some length of time where it is similar to 2016 to 2018 or 19? I mean, do you really lose volatility? Is it the market's just finding equilibrium and stay there for a long period of time? And we're thinking about forward carries and things. So it's still on our mind in terms of managing forward revenue risk. And so that's, again, there's no urgency, I think, in the next month to figure this out. But I think the concern is that we are kind of sliding into something that we saw during that period, adequate oversupply. What is the next supply dislocation? And it's just, that's kind of what's down to monitoring. So that's kind of where our heads are at. Not a lot going on, but certainly not enough to spark urgency in short covering or end user coverage, something like that.
Good rundown, Ben. I really enjoyed that. And I think you're right. As you look at the volatility rate of options trade, whether it's soybeans, corn, or wheat, some of the lowest levels we can find in a decade for this time of the year. So the options market is telling us not to be overexcited. So my head is still in this grinding lower kind of market. We dropped 5 cents, we rallied 3, but in a general sense, we're still down 2. And I still don't think we're going to make seasonal lows, or let's say annual lows, till we know how big is big with this year's corn and bean crop, which probably isn't until the September, October crop report. So good rundown. Appreciate any final closing words.
No, so we still have to determine how big is big. And so that will all be in the newsletter. Dollar gets in. Our crop tour starts in 2 weeks. So we will go and kind of give you the details, maybe put to bed whether there are pollination issues in Illinois and Iowa. So we'll have sort of a more fine tuning of our balance sheet, our production estimates. What does it mean for price? So still a lot of really good research coming out. Just the markets may not do much this week.
Well, it's that time of the year where everybody's on holiday and people aren't looking at doing much. So thanks again, Ben. Everybody have a good Monday. Good trading today. We'll be back on Tuesday following crop condition ratings and some forecasts that may have some more rain in the extended range. Let's see how this all plays out. Be well. We'll be back tomorrow.